What's up, guys? It's Fabrics here, or Fabricio. I'm an 18-year-old day trader. I'm also a 6-foot NBA player or a soccer player, depending if any girls are watching. Some real shit, you guys are either coming from my Instagram or TikTok or my Discord. It doesn't matter where you're coming from. The whole point is just that you're here. Alright, I changed my mic, but I'm going to be going over my 3-step strategy that made me see consistency, lower losses, and higher gains. Obviously, there's more things that help me with this strategy, but here's just like an overall view of like the setup and how you're going to place the trades with the setup. And yeah. So before I go over anything, I want you guys to understand these are concepts. I want you guys to understand these are concepts because I'm going to pair these up throughout the entire video, basically for you guys to understand the strategy. So you guys are going to understand what trends are. You're going to identify what's an uptrend, what's a downtrend, how to spot reversals, right? You guys are going to understand fair value gaps, what's a bullish fair value gap, what's a bearish fair value gap, and what are inverse fair value gaps, right? And the third one is very important because it's actually a tool that shows you or tells you where we could actually spot a bounce or where we actually could retrace to, right? Basically, these three concepts are going to help you understand how I view the market. Obviously, there's more, but these are the three main ones. All right, so the first thing I want to be going over is trends, right? So we have an uptrend and a downtrend, and we also have consolidation, right? When we have consolidation, it's basically just you going up and down, sideways. Really, there's nothing really to trade here. So I don't really like mind or just don't take a trade or just take the day off that day, right? But basically, this is an uptrend, right? We're coming up, we're running up, we're inserting the higher highs, and then we pull down, inserting a higher low, right? And then we come up, create a higher high, then come down, create a higher low, right? What BOS stands for is break of structure because every single time we're inserting that high and we come back down, we're trying to run up and break the previous high to basically continue the trend, right? All the time, right? So we pull down and then we come back up to try breaking the high, right? So we come up, higher low, then run up, break this high, and then pull down, then run up again, break the higher high, and then come back down, insert the higher low, then come up, right? So this is basically an uptrend. And now a downtrend is basically same shit, just the opposite, right? So here we actually come down, insert a lower low, and then create a lower high. Then again, break a structure. We break this lower low, come down lower, and insert that lower low, pull back up, create a lower high, come back down, lower low, pull up, lower high, and then we just keep going until we have a market structure shift. All right, so now we're going to be going over trend reversals, also known as market structure shift, whatever, right? So obviously when we're uptrending, we're not always going to uptrend forever, and as well for the downtrend, we're not going to always be downtrending forever, right? So we're trying to look for kind of areas where we're going to be like disrupting the uptrend, right? We want to see us basically struggling to create the higher highs. Same thing with the downtrend. We want to start seeing us struggle making lower lows, right? For example, here, right? We have this whole structure here, right? Now we want to take our previous higher low that we created, right? We want to kind of mark this out right here, right? If we have a candle close underneath here, right? That validates our market structure shift. However, if we just kind of come down here, right, and then probably have like some sort of wick like this, right? When like a candle just comes here and then we just kind of wick it down like this does not validate the market structure shift. It's just kind of more like a liquidity sweep. We're still probably going to keep uptrending, right? But if you guys have like a wick like that, that does not make a market structure shift. But when you guys have a full candle close like this, right, that validates your market structure shift, right? This will be your market structure shift, and all you really want to do is kind of see more confidences where you could actually retrace into some sort of fair value gap. I'll go over what a fair value gap is in the next step, but basically, yeah, where you pull back and then just come back down, taking the higher lows, basically keep breaking these, and basically cast a reversal to the downside. All right, so let's run through this real quick again, right? So again, you have a higher low, right? You want to break through that, right? And then after that, you want to wait for a pullback, probably retrace into fair value gap, which is in here. I'll tell you guys what that is, right? You want to see basically you not taking these higher highs. You want to see yourself struggle. You want to see basically the uptrend start struggling to continue higher, right? And then what are you going to want to target? You're going to want to target these higher lows. So either here, and then probably down here. Those are your targets. That's where you're going to want to basically start taking profit your first couple trims, right? Because eventually sometimes we're going to see some sort of support here, or wherever, right? And that could cause some sort of reaction where we could actually just come up higher. And now we're going to be going over a downtrend to an uptrend. So basically the same shit over here, just the opposite, right? So eventually we're going to stop selling off, right? We're going to have a previous lower high that we are gonna want to break to validate our market structure shift, right? So in this case, right, if we come up, right, and we have a candle close up here, and so yeah, that makes our market structure shift, right? And we also want to start seeing us basically stop making lower lows. Sometimes we're probably gonna move like this, right? Basically kind of slowly trying to make our market structure shift, right? Here we kind of broke our lower high and then we come down and then come up, basically having our reversal, right? So this is a market structure shift. This is a market structure shift from the downside to the upside. You want to see lower lows stop being created, right? And then you kind of just want to slowly start seeing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. All right, so sometimes you guys are going to get faked out, right? Sometimes you're going to have moves like this where we kind of just come up. We stop making the lower lows, but we're just kind of slowly coming up, right? But we don't have the market structure shift valid, right? That's because we might actually end up continuing lower, right? Mainly because this is going to be your confirmation to be like, oh, we actually might see the downtrend to the uptrend, right? And same thing for uptrend to downtrend, right? We actually might pull down here. We see that we're kind of struggling to take the higher high, right? But we don't have the confirmation that we're going to see that reversal or that fat pull back down, right? We're probably going to see some shit like this, right? And then eventually we're probably going to pull up like that. That's why it's very important to wait for the confirmation. All right, so now I'm be going over what fair value gaps are, right? So what a fair value gap is just an imbalance where price is just going to retrace to, right? And then we're going to see some sort of reaction out of it, right? So what is a bullish fair value gap? Obviously, we see that these candles are running up, so this is considered bullish, right? And then bearish stands for down, so right here we see these candles going down, so this is a bearish type of move, right? So here we see we have 1, 2, 3 candles, right? We're going to focus on the top wick of this first candle and then the bottom wick of this third candle, right? And then we're going to also see the body of this second candle, right? But right here, we actually see that we have the wicks not crossing, which forms some sort of a gap like this, right? That is a bullish fair value gap, right? However, if you have the first candle wick here crossing, same thing with the third candle wick here. If you have these crossing, this is not a fair value gap, right? So let's go back to this again, right? So obviously we have our gap right here, right? The way we play this is just wait for it retrace down to into here and then just place calls to the upside, right? And your long position will look something like this, right? Target the high and then stops underneath the fair value gap, right? And now let's go over the bearish fair value gap. Again, pay attention to the bottom wick of this first candle, right? And then pay attention to the top wick of this third candle, right? Right here, we see some sort of gap here, right? See a gap here, right? And then all we have to do is take our rectangle here and then mark our bearish fair value gap, right? In this case, this is a move going down, right? Where we expect price to retrace into this fair value gap and then continue the move down, right? Your short position will look something like this. Entry in the middle, and then target all the way to the low. And your stop loss would be a candle close above that fair value gap. Again, if the bottom of this first wick here and the top of this third candle right here, right? If they're crossing, right? This does not make a fair value gap, right? There's no gap in between here. So this is just regular candlesticks just moving down. All right, so now we're going to be going over inverse of fair value gaps, right? So basically what an inverse means is just when a fair value gap gets filled, right? So then that makes a fair value gap to inverse fair value gap. And the way you play these is just the opposite way, right? So this is where you're actually going to catch a reversal or just a hard sell-off where, yeah, we just caught the big pull down where we could actually continue higher, right? Whatever. The whole point is just, yeah, we have a fair value gap here, right? This is a bullish one, right? But then eventually we just fill this, right? If we fill this, then that turns into an inverse fair value gap where we actually play the opposite way, where we get the inverse, we wait for the retrace, and then continue lower, right? So let's actually turn this into an inverse fair value gap. And you have to get a candle close on this fair value gap too. Sometimes you might wick it, which will still be considered a fair value gap if you just kind of wick your fair value gap like this. This is still a bullish fair value gap. However, if you get a candle close like this, then that is considered an inverse fair value gap, right? Where in this case, you're going to want to play the opposite side, right? So right here, you're coming down, come back up, retrace, and then come back down, target the lows, right? Same thing with bearish fair value gap, right? Right here, we have a fair value gap that is bearish, right? and price wants to retrace into here, right? However, price just kind of fills this, right? Making this our inverse fair value gap, and now we're waiting for retrace to continue higher, right? So this is a bullish inverse fair value gap. And again, you want to get that kind of close above the fair value gap for this to be an inverse, right? And you could catch some upside. All right, so now we're going to be going over Fib tool. So basically what a Fib tool is just a Fibonacci retracement. So you're going to use this to see where are we going to most likely going to retrace to. Obviously, for you to actually use this, you're going to have to identify the trend. Obviously, this is an uptrend here and this is a downtrend here, right? But you're gonna have to know your trend, right? So obviously you're gonna have your fib tool like this when you're first starting, right? So the way you kind of change your fib tool from this to this is just go to this hexagon here, right? And you see all these numbers, right? You're gonna want to erase all these, right? Except the 0.5, the 0, the 0.618, and then the 1. And then sometimes you guys might like not have the 0.618, so you just type it out yourself, right? And then yeah, right? And I like color coding my shit, right? I don't like having like colors like that. I just like having the shit white. So yeah. So from there, you're gonna have your fib tool looking like mine. All right, so now we're actually gonna get into how we're gonna use our fib tool, right? So obviously, when we get our fib tool, right, now we have it looking like this, right? So we're gonna have to spot our trend. We have to know if we're uptrending or downtrending, right? So from here, this is an obvious uptrend. So we start from the bottom and start all the way to the top, right? You're gonna tell us the top because there's gonna be a point where we just kind of sell off and stop inserting the higher high, right? And obviously, when market moves, we're creating fair value gaps, right? We have a fair value gap here, right? And we also have a fair value gap here. I marked these as fair value gaps because you guys could kind of see that when I was kind of making this, it looks like we have like those little gaps here. So just so you guys understand, this is my demonstration of a fair value gap. But yeah, we have two fair value gaps and we're wondering which one is going to be the fair value gap where we're going to see a bounce. And this is where we use fib tool into play, right? So we have two of these. Which one are we going to decide? We're going to decide on this 0.5 and the 0.618. Why? Because this is our golden zone. This is our golden zone area. This is where we expect price to basically bounce. So we could just erase this fair value gap for now, right? So maybe we're probably just coming down, right? We stop inserting the higher high and then we're just coming down all the way to this fair value gap, right? From here, if you're trading futures, it's fine to kind of just take a trade here, knowing that your stop loss is literally a kind of close underneath, right? But again, since I trade options, I like kind of waiting for more confirmation, right? So this is where I use the other confluences to basically kind of help me understand if we're actually gonna continue higher, right? So again, we came back down. What do we create? A bearish fair value gap right here. So let me actually get rid of this tool for now, right? But we understand that we use this tool to help us spot the fair value gap, right? So now we have our bullish fair value gap that we're in, right? So we understand that we're in this bullish fair value gap, right? We see that we created this bearish fair value gap, right? And you guys know how I talked about how on the last clip, right? If we inverse this, we could potentially see upside, right? So we want to see an inverse of this fair value gap and then probably a push down so then we could actually start continue higher, right? And that's just extra confirmation, right? From here, we could take longs, right? Either at the inverse of the fair value gap or at the retrace of this and then continue higher. And then from here, your targets are going to be basically this point right here, this point right here, and this point right here. And if you took the trade right here, then obviously your reward is going to be longer, right? But just in case you want that key confirmation, then that would basically be it, right? All right, so now we're going to use fib tool for the downtrend, right? So obviously this is an obvious downtrend and you're going to see that we have two fair value gaps, right? We have a fair value gap here and a fair value gap here, right? So now instead of starting from the bottom to the top, we're actually going to start from top to bottom for the downtrend, right? And we're going to see where our golden zone is at. So our golden zone is this little box in between the 0.5 and the 0.618, right? So obviously we have two fair value gaps, right? We have this bearish fair value gap here where we could see the rejection, or this higher probability fair value gap where we could see that rejection, right? So literally we're using this one because this is higher probability, right? This one we could potentially see a reaction, but this is more higher probability just because this is inside our golden zone where we're going to most likely see that reaction down, right? So let's just erase this for now, right? Then maybe we come up, come down, come up, come down, come up, and come down, right? And then now we're inside our bearish fair value gap, right? Now we're inside that resistance where we're like, all right, do we want to place puts, right? You're probably not sure yet. However, you're gonna want to try identifying more confirmation for you to actually place your puts, right? So let's just mark this right now as our bearish fair value gap, right? And as we're coming up, we're making bullish fair value gaps, right? So we created this bullish fair value gap here, right? So what do I want to see? I want to see this bullish fair value gap inverse, right? And we could also see this higher low right here, where if we break this low, this could activate our market structure shift, right? We could displace this low, right? And we could get more confirmation to basically short, right? So from here, we get an inverse of this fair value gap and possibly our market structure shift at the same time. We get a retrace and then we just kind of move down like this, right? Targeting basically what? These two lows, right? This low here, this low here, and potentially more lows down here, right? So your short position will look something like this. Stop loss candle close here or candle close up here, depending what you want, right? For me, it will be here, right? And then your trade will look something like this. All right, so basically this is how your trade should end up looking like. This probably looks like a lot, but it's really not that hard when you actually like understand what you're doing and understand all these concepts and just put them together, right? So obviously, if you want that extra confirmation, you're gonna want to wait for these other confluences or other concepts, right, to basically appear and then actually tell you that we're moving that way, right? Obviously, as well, inside the zero point 0.5 and the 0.618 this zone right here, you're gonna need that fair value gap. You're gonna need that fair value gap or that support, right? We also use order blocks, right? If there's an order block, then I'll trade that too, right? And yeah, now this is how it'll kind of look like in a candlestick chart, right? You see we're kind of running up here and then we sell off, right? Where we're heading towards, we're heading towards our golden zone. We get a reaction, get tapped in, and then take it back higher, right? And this is basically for a bearish trend, right? We see that candles are moving down, right? We see that we created a bearish fair value gap. This is our resistance down, right? We pull back up and then go lower, right? All right, so now let's actually take this to the real charts, right? So obviously we start on the higher time frames to find our higher time frame support, right? So obviously this is the 1 hour, right? We see that we're uptrending, we're coming up, coming down, coming up, coming down, coming up, right? So we already identified our trend. So now we're gonna mark our fibs from the last swing low all the way to the last high, right? So swing low, swing high, whatever, right? The last high and the last, the last low that was created and the last high that was created, right? We see that we did get a reaction inside our golden zone. So we're actually going to see what was actually there that we reacted to. So let's just go to our 30-minute and we see that we reacted to this 30-minute bullish for value gap, right? So now we could take into consideration where if we hold this fair value gap, then yeah, we could start taking these highs above here, right? We could take this high here, maybe this high here as well, right? If we could hold this fair value gap and get enough confirmation. However, if we inverse this fair value gap and see confirmation that we're gonna possibly take the lows all the way down here, then we're gonna place puts, right? But as of right now, we're supporting it, so it's just calls, and I'm gonna be bullish for the day, and that's how I find my bias, right? So now let's just go into the smaller time frames and actually see how market opens, and just let market kind of spawn in, and then just look at shit happen, right? So market just kind of consolidates a little bit, right? We see that we took this high, right? But we still haven't had a reaction yet, right? Right here, we do have a bearish fair value gap here. And if we inverse this fair value gap, then yeah, we could potentially see us going back to these highs again and then taking them as well, right? From here, we did get an inverse of this fair value gap, right? We got a little tiny rejection right here, but the next candle we inversed it. So now we start seeing our first confirmation that we're gonna possibly take these highs. So then from here we could enter in our calls, right? Obviously here this is a paper trade, so we're just gonna hit the buy button. For this example, right? So from here we long, right? Stop loss candle close underneath the inverse of the fair value gap. Your first take profit would actually be here, and then your second take profit would be probably like the next high. It could be here, right? It could be here, right? All these points, right? You have all these take profits, and depending how you close above, if you keep creating bullish fair value gaps, and if you could get that run up, then yeah, we could take those profits, right? Obviously, this is hella take profits, but let's just see how this shit runs. Obviously, I know what happens because I fucking took this shit, right? Fucking alerted this shit, and this shit low-key did hit all take profits, and I'm fucking goated, right? That shit's kind of crazy though, and yeah, we could see how on the 1 hour it did hit the last take profit all the way up here, right? And this shit was low-key goated as fuck. I called this bitch, right? So literally higher time frame, fair value gap, right? And then we wait for the confirmation that we're gonna hold, and then we just take calls, right? However, if we inverse our only higher time frame of support, then yeah, we could start taking lows and potentially go lower, right? Possibly to these fair value gaps as well. Again, to sum it up, support above here, calls. Inverse this, puts. So let's run this shit again, right? So first things first, go on our hourly or our higher time frames, right? And then spot that higher time frame support, right? As of right now, we have this 1 hour bullish fair value gap where if we hold this, we could potentially hold calls and be bullish for the day. But if we inverse this, then yeah, we could start targeting these lows here, here, and possibly inverse this bullish fair value gap, right? But let's just go on the smaller time frames to actually look for more confirmation, right? So on the 5 minute, we really don't have like too much. Let's go on the 15 minute. We do have this 15 minute bearish fair value gap where if we inverse this, then yeah, we could potentially see a good move to the upside, right? So let's just see how we react to this. We got a first inverse right there, right? Let's actually go on the 5 minute to actually see if we could get a solid entry, right? So we got our first inverse here, and here we do have a bullish fair value gap here. So now we got an inverse of a 15, and we started seeing a bullish fair value gap on the 5 minute, right? So what are we gonna do? Mark our fibs from this here all the way to this here, right? And we can see that our 5 minute fair value gap is lined up with our golden zone. Low key, this shit's low key. You can't really see it that well, but let me actually just erase a couple things for you to see it, right? So we can see that this is lined up with our golden zone. So now from here, you are gonna want to place longs inside the fair value gap or the top of it, right? Pretty sure this one just tapped in, right? Got tapped in and then place calls, right? And then from here, you're going to want to take your profits here, and let's just go on our hourly and see where our possible rejections, right? As of right now, the only possible rejection where we could actually see some shit would be this bearish hourly fair value gap, right? But let's just see how we hold up, right? We run up again, and actually, you were able to take a second trade right here because we have another 5 minute fair value gap, right? And if we mark our fibs from down here to this low right here, all the way to this high right here, we could actually see that this is our golden zone as well, right? So from here, we actually did fall through onto here, and then we actually ran up a little bit more, right? And then from here, we did the same shit again, right? Mark this to this, right? Then from here, we did fall into our golden zone, but we didn't really have that support underneath. So this would have not been a trade, right? But yeah, we did end up going to that hourly, right? We didn't inverse it, right? We did get a rejection, which actually led to the sell-off, right? Which you could have also taken this trade as well if you were like paying attention. Only taking calls this day and only taking call setups, right? Because if you're gonna take call setups, then you're gonna want to look for bullish setups, right? You're not gonna take calls in a bearish setup, right? So this was a lot of bullish momentum, and this is what I was able to catch throughout the day. At the end of the day, this is where we did see that sell-off, right? And I'm pretty sure it was because of that hourly fair value gap, right? Which is why this was our take profit, right? Because this is a point where we could have turned around, right? But see how this golden zone works, right? We come up, come down, touch our golden zone, run up, come down, touch our golden zone, run up, then come down, touch our golden zone. However, there was no support here, so this was no trade, and then we come up. And if you were to hold this trade even longer, you will want to see this hourly get inversed for you to actually take it to these highs. However, this did get rejected, and then this shit just flopped. But this was still a good trade as well. All right, so now let's get to like this bearish trend, bearish setup, right? This is actually like a future setup, right? So as of right now, what do we see? We see that we actually swept this high right here, right? Or lower high, whatever, right? And if we want to hold above, we want to see basically this bullish fair value gap basically hold, right? However, we didn't really get that hold, right? We actually did inverse this. So as of now, we're going to be looking for put setups, right? So this was, again, this was on futures. This was during London session, right? We instantly sold off, right? So we didn't really have that entry. But what could we take as of right now? We just have that hard sell off, but we can mark our fibs again from this high right here, or not high, this lower high right here all the way down to here, right? And what could we mark? Our fair value gap, which is in our golden zone, which is right here, right? This is a little bit out of our golden zone too, but it's fine because it's still inside our golden zone, right? So now we have that 5 minute fair value gap where we could tap into, right? And basically go short and just sell, right? So let's just wait and wait for our setup to basically hit our entry. Right, so we already saw that we got tapped in, right? So from here, we're gonna want to enter our shorts, right? And if we also go on the 1 hour, we did create a 1 hour fair value gap here, which I remember right here. So now we're starting to see more bearish confidences being built up, right? We have an inverse of this fair value gap. We got that 1 hour fair value gap as well, right? We go on the 5 minute, right? We see that we're inside our golden zone. We got tapped into our 5 minute fair value gap, right? So from here, this gives us enough confirmation that we're probably gonna see these lows being taken as well, right? So let's just see how market kind of reacts, right? Obviously, since this is futures, this kind of took a minute. Obviously, we still see that we're having bearish confidences form and being held, right? We saw that bearish fair value gap getting tapped into again, or not again, but we got this bearish fair value gap that was formed and got tapped into, right? And our take profits would have been here, this low here, and then this low here, right? And as long as we hold under our bearish fair value gaps, right? And if we create more bearish momentum, then we could keep holding the trade. There's no reason to actually like get out, right? And we do hold underneath these and we hit the first take profit, second take profit. I'm pretty sure the last take profit did hit on New York session. Yep, it did. So basically, this was how I was able to find bearish confluences and a bearish setup, and how I was able to decide I'm gonna be bearish on this London session. To sum it up real quick, basically, again, sweep this higher low, inverse this bullish fair value gap, right? We create a bearish hourly, right? Go on the smart time frames. Saw that we got into our golden zone. We short here. And if we stay underneath our 5 minute, we're good. We're chilling, right? And if we keep creating bearish momentum, bearish confluences, right? We created that bearish fair value gap here, created this bearish fair value gap here. If we stay underneath, then we could keep holding our trade all the way down to these lows. And that's just it. All right, now we're getting to the end of this video. Thanks for watching. I hope you guys got a little understanding of how I analyze my charts. Obviously, there's a lot more to trading than just a 30-minute video, but this should give you guys the idea of how I trade and read markets, and basically how I see consistency, get lower losses, and higher gains on my trades. You guys could follow my socials. I already put them up here. I do vlog as well, so you guys could also be entertained by that, other than just day trading. Cause low-key, that should sometimes be lame. I also do have a Discord where I show hundreds of people my strategy and teach them how to become better traders, be profitable, and basically not be like shitty, right? Hope y'all have a good one, and let's fucking make bank in these fucking markets, bro.